Yeah. Hello, welcome. Thank you all for being here today. Sorry, I was a couple minutes late here. I started spacing out. Um, we're broadcasting live from New York City and outside of DC. Neil, thank you for being here. I have to blame somebody who might jump on the webinar today. So before he does, I'm going to blame him. But this is in large part Hamlet Joseph's fault, who I've known for years and years and years, and former um, agency person. That I can say that because he's no longer there, but has a fund that we're very proud to be part of and happy to participate in. And so we're here today with Neil because of Hamlet. So thank you, Hamlet. So we can't hear or see you, but we can and hope that you post your questions as they come to mind. We'll get to as many as possible. We got a whole bunch of folks coming on today. We're going to do this again just for the record. This is, as we've done many, many times, sort of a get acquainted, fireside chat, learning more about what's happening. And then we're going to do a pitch in a week or a week and a half or so, I think it is, but you'll all be aware of that. And by the way, when you're listening today, if anything strikes you that's interesting, feel free to connect directly with Neil and his team, and we're going to make sure that is easily accommodated. And then finally, if there's anybody that you know that might be interested in participating in the fund as an LP, that's what this is all about. So you're welcome to bring them in as well and look under the hood if that makes sense to you. We're going to record this today. We often post it to the Family Office YouTube channel. We asked the presenters to post it somewhere else because we don't need to drive people to our YouTube channel, but drive them to theirs. So you can look forward to that. And also you'll be able to share that recording with others. Today, I think we're probably not going to reveal all the secrets of the CIA, but who knows what happens, right? As you know, we've had many fireside chats like this with Hamlet and talking about what's going on with the globe and geopolitical stuff. So there's probably some of that involved today. So I really appreciate everybody being here today. Again, please feel free to post in the Q&A or the chat box questions, and we'll get to as many as possible, and then we'll have follow-up after that. And so there you have it. Neil, welcome. Thanks for being here. Super excited to have you. I've been looking under the hood a little bit. So why don't you start with giving us a little background on you and then how this all came about?
Sure. Great. Thank you, Arthur. And thanks everyone for joining. We really appreciate it. I'm Neil Keegan, CEO and co-founder and co-managing partner of Marlinspike. Just the quick background on me: I actually grew up in the DC area and went to the Naval Academy. After I graduated there, I served 6 years in the Navy. I was on ships called a surface warfare officer. So I was fortunate enough to be stationed all over the world and had some great events, great adventures there, but always knew that I wanted to study economics and finance and get into the investment side of the world. So after graduate school, I went to Goldman Sachs. I was with Goldman for about 8 years, 4 in New York and then 4 in LA. I was working with one of my clients who sold their company in 2006. And in the middle of the financial crisis, he asked me to come over and help him with his portfolio, which turned into establishing and running his family office. So I did that for 11 years out of Los Angeles. So I'm sure there's a number of family office folks on the call here, and maybe we've crossed paths in the past. Really loved that. It was a great experience. It was exciting. It was challenging. There's a lot going on in terms of establishing a family office, running a family office, and also running a pretty dynamic Yale endowment style portfolio, really through the financial crisis and up and out. But I always knew that I wanted to invest my own capital to run my own firm, and really to invest in things that were near and dear to my heart. And so a couple of years ago, I wanted to move back to DC again, where I'm from. and I wanted to start my own firm. So I took a buyout of my equity position and had some capital that I wanted to start, to put to work. But again, I wanted to put it to work into things that were really interesting to me, both from a passion or a mission standpoint, but also an investment standpoint. So I always tended to skew towards alternative investments. I liked more esoteric, non-correlated types of investments that had a nice quality of asymmetry to them. And so what I found, especially being back here in DC, is that there was this neat nexus between what's happening in the DC area, but also what's happening, really across the country. But a lot of Silicon Valley, where there's this great confluence of technology, capital, knowledge, understanding of the problem set for national security. And so, we started off doing, deal by deal, investing in these really unique and innovative companies that are solving challenges for national security, but also could have massive commercial applications. And so we call that, dual use investing. So that was really the foundation, the basis for starting Marlinspike. And I'll stop there, and then we can pivot to other questions.
What I was puzzled about, I don't know how you did this, is that if you start a fund or you start an investment process and you rally your relationships and cobble together some capital, for the most part, you can, pull in some people that make it look like you know what you're doing. And in your case, I mean, I'm looking at the list and can't even believe it. Can you talk a little bit of how you pulled that off and a little bit of who they are?
So, sure. The list of the LPs or the list of our team?
Of your team.
Sure. So it's a great question. And again, I didn't want to be a one-man band. I wanted to really build and grow a team of like-minded partners that had really the same type of DNA, the same vision, the same passion for our mission of investing in these unique companies, but also different skill sets. So we built a great team. My partner and co-managing partner is Mislav Talusik. So he's got very deep industry experience as a chief investment officer in this defined space. So dual use investing, and we are a specialist fund, and we've got a very niche focus in really 5 areas that we think are the biggest and growing the most and the most necessary, not only for the Department of Defense and the intelligence community, but also have a lot of commercial applications. So it's AI, machine learning, data analytics, it's autonomy, robotics, it's aerospace, space, and cyber. And Mislav has been, a real innovator and an investor in this space for about 15 years. So when we started Marlinspike, we were really doing, deal by deal, and I kept, bumping into him. We were sharing notes. We did a couple transactions together. And I just thought to myself, this is the guy that I need to partner with. He would be the ideal chief investment officer for the firm. So that's one. 2 is a gentleman named Chip Walter. He's actually right here behind me. He'll probably chime in at some moment. Chip, there he is. Chip's a fellow Naval Academy graduate, class 83, 28 years in the Navy. He's a P3 pilot, which is a submarine hunter. He had major command. He went to Afghanistan and worked very closely with General Petraeus. And then when General Petraeus was tapped to become the director of the CIA, he took one person with him, and that was Chip. So Chip went with him to the CIA and worked very closely with him for 2 years. And then when the general went to KKR, Chip wanted to stay with CIA. He moved into what's called the science and technology. And what's important about that, and why it means something for us here at Marlinspike, is that for 5.5 years, Chip was the person that really understood the problem sets for the CIA and married up with In-Q-Tel, which is the investment arm of the CIA, to coordinate on the new and innovative companies that they were going to invest in. So he was very influential and did about 160 deals together with In-Q-Tel, and really, I think, is a pretty unique person in this space with his body of knowledge. He thought it was time to kind of refresh the nickname was called Quick there, to refresh it quick, and he wanted to come out into the commercial sector. And so he was handpicked by Northrop Grumman to stand up and lead their venture program. And he did that for about 3 years, had some great success there. But as we got to know him, again, very similar to Mislav, we were collaborating on opportunities. We were comparing notes. and we were discussing all types of deals. But the more time I spent with Chip, the more I realized, like, wow, this is a person that we need to have for the fund, because he adds a very different composition to the team. As you'll see, a lot of teams out there, you might have, a banker and, a couple of analysts, but Chip really adds a unique dimension, not only on understanding the problem set and with his deep relationships with In-Q-Tel, DARPA, the Pentagon, pockets of the DoD innovation centers, but also after we write the check and how we actually help these companies grow, and in particular, how we help them navigate some of these pockets in the defense community. And then to round out the team, we've got a great CFO, a guy named Tim Busby, who ran a multi-billion-dollar public company. We enticed him to come over to be our CFO. Terrific guy, real steady hand on the tiller type of person. And we've got some really amazing young people as well. Nick Snowd is our lead associate, runs our deal pipeline and due diligence. He's a West Point grad, 2013, Army communications officer, was working in private equity with Carlyle. And we spent some time with him, and he was getting his MBA at night at UVA, and he had an opportunity to join us or them, and he chose us. So we were very fortunate to get him. And then last but not least, our analyst, Will Close, very bright young man, Duke graduate, fluent in Arabic, national security studies. And so he does a lot of work for us on the analysis side and working with our limited partners.
So there was a sentiment, let's call it that the government primes and other ways to access contracts with the government has gotten better, easier, faster. Is that true? And is it relevant to the types of investments that you're making?
So that's a great question. And I'll start off by saying that there's something called the NDAA, which is the National Defense Authorization Act, which is really fascinating. If you go back to the 1960s, it's literally the one thing that passes every year with bipartisan support. So it's just recently passed a few weeks ago, $858 billion. And that's a year. And it was up 10% from the previous year. So I think that's a recognition that there's continued spending for defense. And even if you look around the globe, Japan, they doubled their defense budget. Germany doubled their defense budget. And look, this is really somewhat of a response to the acute threat, which is Russia and what's going on in the Ukraine. But if you look at China, there's a pacing threat there. And so we don't think these threats are going away anytime soon. So it creates this durable trend of capital coming into the space. And there's a lot of capital flows out of that budget that are going into research, development, innovation, and they're going into these pockets where we need the help: cybersecurity, space, AI, analytics, autonomy, robotics. This is where the change is happening and needs to happen. Well, let me pause there and actually let me bring Chip in, because he's probably got a little bit more of a nuanced answer to your question of is it working? Is that true, and is it working?
In terms of the primes and
the primes, the defense, and the perception of the capital that's coming in, is it getting to where it needs to go?
Yeah, is it flowing easier than it was at one time?
Yes. So I think capital is flowing, technology is slow. So by that, I mean that when you think about it, if you take a look at all the innovation hubs, and I heard Neil talk about In-Q-Tel, but there's also AFWorks, the Air Force, DIU, Department of Defense, Army Applications Lab, who I was just sending an email to 2 seconds ago. And then you have NavalX. You have all these groups that are deploying cash into the ecosystem, and to the tune of about $2 billion a year annually. So a lot of money goes out. So what we're trying to do is understand where that money's going, where are the winners that we think on the dual use side of that, and pick a couple winners and try to support them through the evolution that I heard Neil talking about after we do the check. The biggest challenge is getting them into a program. It's not getting them awareness. It's not getting them traction. It's getting them onto a program, whether that be in the Army, Navy, Air Force, Marine Corps. And that's where we're seeing, and that's why we've had some podcasts. We've both, Misloff and I have done some articles, one for Bloomberg and mine was for Breaking Defense. But the whole idea on this is, how do you utilize the tools that are already out there to expedite transition and to make it more of a streamlined process? So if I could, quick story. In Italy, Major Command helping a a Sicilian take down his orange grove, because they die about every 10 years. So so he told us to cut the tree off 2 feet above the ground, and we thought that would help him pull it out. It wasn't. It's because he grafts in new trees into that root structure. And we asked him why. And he said, because this plan has been working for, it takes 30 years to get the root structure and get the water out of an arid soil. That's the same way we have to think of the primes. The primes have an aggressive program management program where they go right up to the hill and they start, I don't want to call it lobbying it, but they start shaping the ground there. They have a big team that goes into the Pentagon and they just, shape and develop, and all that stuff goes on. We need to get our programs into that so that they are the forcing function to help it go there. And that's what we're working really hard on. I hope that answers the question. But it's a whole of venture program here. I mean, they talk about the whole of government. You get all the State Department, all this people working on stuff. Inside of tech transition, it's everybody. And I think my cut on it is, and I've done this now for a while, we seem to be, in my humble opinion, have the right path to make some of this happen. We're seeing it across the board with, if you want to go into Elroy or you want to go into some of the companies that are in our portfolio, that we have them talking to people that never talked to before.
So hang on one second. When you say into a program, does that mean either of both capital and business development?
So when I say program, I'm talking about the money that Neil addressed in the NDAA that goes for that goes to all the services. So what we want that company to get into is on a program of record or into development process to be in that program, because then you take advantage of the stickiness of the government procurement cycle. And the primes understand the federal acquisition regulations better than anybody. I think they understand it better than the people that wrote it. Probably. So seriously. And so the point is, once you can get that stickiness and you get on that program, it's hard to pry it off. And then we can use that as our, we call it our program, and I think you went over this. The playbook and the recession resiliency of our process. We think that can be the bottom, if you will, the downside protection in a market like we have right now.
Yeah. So
that was a lot. I'm sorry.
No, that's okay, Chip. I was going to suggest that we have a limited amount of time, but in those 4 or 5 silos, cyber, AI, right, the dual use silos, let's to the extent that you can take 1 or 2 or 3 or 4 and say, okay, this silo and this is what we have invested in that represents that.
You want to go?
That makes sense? Yeah,
that makes sense. I was going to bring up the
yeah, let's do that.
Hold on 1 second.
Looks good.
So can you see the screen?
Full screen. Yeah.
Got it?
Good.
Okay, great. So, where we are with the fund, we've specifically went out to have our first, good close, family office anchors that have been with us since our first close, in Q1 of last year. And we wanted to continually raise money, but also do deals to demonstrate that, the team is operating, the team is gelling, we're seeing opportunities, we're putting capital to work into some pretty, unique companies. So we've got 5 companies in, we're closing on 1 more next week. So one of them is in space infrastructure, Voyager Space. Elroy Air is an autonomous drone. Rendered AI is a synthetic data company. Privateer Space is a space data company. Andrel is a really interesting, innovative company, kind of upending the defense primes. And then Hypori, which is our newest investment, that's a cyber-related company. So let me just kind of quickly again highlight our sectors. So in each of these sectors, and we're doing a lot of work on the total addressable markets and where they are and how fast they're growing, and then really digging into the subsectors to pick the most attractive ones. And what's fascinating is if you look at all these sectors right now, the current total addressable market is about $1.7 trillion. And during our investment or the life of the fund to the end of the decade, it's growing to almost $8 trillion. So massive growth and a massive need, both on the Department of Defense and the commercial side. So to answer your question on an example of a company, and look, we've got robust pipeline. Last year, we looked at 500 opportunities. We invested in 5. One of them, which is really unique, is a company called Anduril. And the reason I'll bring that up because it kind of fits into what we were just talking about in terms of capital flows into the space, the defense primes, and the innovation that's required to go fast and to innovate. And what's neat about Anduril is that, this company, and they're a private company, and we kind of joke that it's like if Founders Fund put Palantir and SpaceX together and they had a baby, it would be Anduril Industries. And this is a company that some of the folks on the call might know, founded by a gentleman named Palmer Luckey. Some people might know him. He's a brilliant technologist, sold a company called Oculus to Facebook when I think it was 19 for about $2 billion, but always had this, passion and mission for not only technology, but for defense. And he's kind of like, you know what? This world of defense primes and, the Northrops and the Lockheeds and the Raytheons, I mean, they're all great companies, big companies, but like, there's a lot of room to innovate here. And there's so much market share that can be gobbled up by really smart, thoughtful, innovative companies that can kind of get inside of the decision loop of some of these bigger companies and just move fast and iterate and create things that they know that the DoD needs or the commercial sector needs. And so this company, phenomenal company, doing things like, border patrol, doing a lot with drones and autonomy. One of their companies, they actually recently acquired a company called Dive Technologies, which is an underwater submersible. And, they just won a big contract with Australia. And so what's neat about
$100 million contract, like, wow.
Oh yeah.
That's a lot of money even to me. Huh.
Yeah. Oh, even for you. Yeah.
Yeah.
So they won this contract to deliver this drone. And you think about Australia, you've got a massive coastline. I mean, effectively, it's a huge island. And guess who's nearby? China.
Yeah. China.
So
yeah.
They won the contract. And then what's unheard of in defense circles, they delivered 3 months early. When does that ever happen? So we like how they're operating. They're winning big contracts. They're making an impact, and we think there's a lot of room to grow in the defense ecosystem. So that's an example of a company, and they're software focused too. So this is also something that we tend to look for. We like companies that are really leading with software, but we're not afraid of companies that have a hardware element. And this is kind of a nice combination of those two things.
Very cool. How old is Palmer Luckey now?
I think he's probably knocking on the door at 30.
Yeah. Wow. Yeah.
But he's got a great team. Brian Schimpf, their CFO. I knew him from our Palantir transaction. So I mean, and they had effectively closed their round, but we reached out, we did our work, and they wanted us to come in on the cap table. And Trey Stevens, another Founders Fund, just really terrific, bright person who's doing some great things for the country. So we're really proud to be part of this group. And it was actually funny. They put us in the press release and it was like, Anduril Industries closes the round, Founders Fund, APC, Lux, Marlinspike. Like,
nice.
We like to say we're small, but we're mighty. And we like to break our way into these interesting cap tables.
All right. So since you brought it up, when did you start raising? How much have you raised? What's the target? By the way, is that a supersonic boom picture?
So that picture under Aerospace?
Yeah.
So that actually is a neat company. It's called Radian. And so I'm not sure if I mentioned this, but before we launched the fund with Marlinspike Capital, we did 11 transactions and deployed about $35 million. Palantir was our first one. We were last money in right before they went public, and we had a really nice exit there for our investors. Made almost 4x our money in return stock within about 6 months. So that was a good one. Radian, yeah, that was good. They're all of our investors were like, well, that was good. Let's do that again. I'm like, okay, Roger. But Radian Aerospace was one of our pre-fund deals, and it also kind of highlights what we learned while we were doing deal by deal. So this was a smaller balance sheet investment for us. We didn't go out and do a big raise or an SPV for it, and partially because it was early. And so what Radian, what they're doing now is they're building a space plane, And as crazy as that sounds, it kind of makes sense. Like right now, I mean, thankfully, we've got SpaceX and we can finally get our astronauts to space. But the cadence of those launches, it doesn't happen every day. So if you think about if we lose a satellite or we need to get up to the space station, like now, we don't have an answer for that. So this is a tactical space plane that they're building. And the neat thing about it, I mean, if you see it, it kind of looks a little bit like a cross between a Concorde and a space shuttle. It's designed to take off on a rocket sled on a runway and then get to space and have 5 apps. So we were early in that one. We added up on a follow-on round. They were in stealth mode for a while. Now they're out in the public domain, but they've raised a fair amount of money. But we look at this one like, you know, they could be a SpaceX type of company, and we wanted to get in early and watch them. And this could be one that, as they continue to progress, you know, we put either in this fund or in a subsequent fund based on how they're progressing and then the level of risk we want to take.
Yeah, it's not good or bad, but that brings up an often asked question that since you were doing ad hoc investments or SPVs prior to the fund, are you now exclusively doing things in the fund aside from any follow-ons that would otherwise have been, you know, taken on the prior investments?
Sure. So we're totally focused on the fund, and we basically shut down the deal by deal side fall of 21 when we put the fund together. And so to answer your question earlier, it's a $100 million target for the fund. You know, and looking back, you know, we set the target in fall of 21. So maybe a little bit of an aggressive target under a different capital raising environment. But we said, look, let's set ourselves a lofty goal. And if we land at 50 or 75 or 100, great. It doesn't really change our strategy. It doesn't change the number of companies. It doesn't change the types of companies we're looking for, you know, based on their stage. And we really skew more towards growth than kind of your classic seed or venture. That's kind of a small part of what we do, but it's really a sourcing strategy. So it's just the sizing of the deals is really going to scale up just based on the final AUM for the fund. So we launched in Q1 of last year. We've got over 34 million of commitments in the fund and with our 2 SPVs, and we will do co-investments for core deals in the fund. So out of the 6 deals in the fund now, we've got 2 SPVs. One is for Voyager Space and the other is for Elroy Air. And so we'll only do the co-investments if it's part of the fund. And for our investors that say, look, you know, we'd like to, you know, add more on this particular company. Obviously, they're at reduced fees, so it brings down their overall blended fees. And that's a good way for folks to get more of the companies they might have a particular interest in.
Yeah. What other one do you want to talk about?
So why don't we talk about an interesting one? Could be Elroy Air. So Elroy Air is a fascinating company. We got to know them in our pre-fund days. So we led their safe round at 75 million. We invested about $3 million, got to know Dave Merrill, the CEO. And this is one of the deals that really brought the core team together. Misloff actually had introduced me to Dave Merrill. Chip was evaluating Elroy Air from Northrop Grumman, his seat there. You know, we were trading notes, and you know, Chip, you know, had a bench of 40,000 engineers at Northrop that could really, you know, tear apart the technology. So this was one that we all really liked the company. So we led the safe round, and then Dave was like, "Wow, that was great. We'd love for Marlinspike to lead the A round." So we did. We added another 5 million through an SPV, led and priced the A round at 100 million, and you know, brought some other investors along. Lockheed Martin came in alongside us. Prosperity 7, which is Saudi Aramco's venture arm. So all in, it was about a $40 million round, and we just stayed very close to Dave. And as Chip mentioned earlier, we don't stop after, you know, we send the wire for the investment. We stay really close. We try to figure out how we can help them. And this company, what they're doing is they're disrupting the middle mile for cargo. So this is not like a Joby or an Archer or a Lilium where it's a big cargo, it's a big drone ferrying people. This is a drone specifically designed to fly 300 miles with a 500-pound payload. And it's got really 3 mission sets: Department of Defense, humanitarian, and commercial. They've had tremendous success. They've already flown the prototype. They're getting ready to fly the next iteration on their second plane in the next couple of months here. They've got over $2 billion of master purchase agreements and letters of intent. They've got signed partnerships with FedEx, CVS Health, Mesa Air, Bristow Group. So they're really poised to have some really spectacular growth. And one of the main reasons we like them is this is kind of dual use highlighted. So you can think of them producing missions for the Navy. So Navy ship to ship or ship to shore, or if you've got Marines that are bogged down under fire, it's much smarter to send in an Elroy with 500 pounds of food, fuel, water, medical supplies, and anything else that they would need, versus send in a $20 million helicopter with 2 pilots and a crew chief that might just have a pallet of stuff. It just makes so much more sense. And then humanitarian, let's say there's a hurricane in Puerto Rico, you can very quickly then send in, you know, the supplies that they need in a very safe and efficient way. And on the commercial side, the total addressable market is just huge and really dwarfs anything they can do for the Department of Defense. So that's where we see this company having, you know, massive growth.
So this is going to demonstrate how little I know about aviation or that sort of thing. Does the window open up a little bigger to fly this sort of thing because it's unmanned into bad weather? In other words, are they going to say, because there's a $20 million helicopter and 3 people, we're not going to go into that storm, but we'll go with this?
So let me bring the pilot in.
Okay.
All right.
I heard weather and my ears picked up. Whenever I hear Elroy Air, it's one of my favorites as a past pilot, as Neil knows. Whenever I talk about Elroy, I get all excited.
He's going to start talking with his hands now.
Yeah, I'll try to keep the hands down.
Are you Italian or Greek?
Italiano, yes. So let's think about that for a second. I would view this not as to throw it into weather. I would view it as Neil was indicating, like the Marines, you have less risk in terms of putting into a contested area. I don't think any of these drones in the near term, I mean, Elroy is probably going to be flying between, you know, in the military areas, whether it's over the water or over land, in areas that we're having, you know, conflict in, it's going to be flying low, if you will, maybe the first 1,000, maybe 1,500 feet, because it doesn't want to stay in the eyesight of anybody too long to become a target. So you stay lower to give the time at which it's flying over you a short period of time so you can't target it, right? So that's one thing. The second thing, most of these drones, unless they get to the very big, they're not going to have anti-icing equipment yet. That is still maturing. So yes, it can fly in weather, it can fly in rain, it can do everything, but it's probably going to stay below the freezing level when it can. And if the freezing levels below where it's flying, it's probably going to avoid it, because icing is bad for anything that flies. It just becomes very heavy. So I guess the answer I would say is it's more advantageous on a risk benefit in contested areas than it is necessarily in weather. I would also add one more thing as a pilot. If I'm flying this off of a ship and that ship is a destroyer, I happen to have like a little bit of information on this because my son is a helicopter pilot on a ship deployed right now. They have 5 or 6 pilots. They have crew rest requirements.
Right.
So just imagine that you want to get a lot of stuff to the carrier or to another ship or to the shore. Let your pilots sleep for things that you need them to. For mundane missions like cargo, launch the Elroy. You know, let it get going. It can fly. It doesn't care how long it sleeps. It's, you know, you don't have to eat. You don't have to feed it. You just have to give it fuel. You know, it doesn't bitch about its pay, all that stuff. You know, so it just becomes a very easy thing to put into what's called ConOps, that, you know, your operating procedures.
So I might be creating some controversy here, but it's on purpose. And again, it's going to sound like I know what I'm talking about, but I don't. So the incumbent who has the contract for the drones now, you know who they are, military drones, right? The 2 brothers. Why wouldn't they be all over this and just bury Elroy?
Well, I'm afraid I'm not catching the Yeah, I think, yeah, those are not cargo drones. So
I know, but you would think
they're
naturally that
really,
would be the next thing for them to do, right?
yeah, but it's a totally different thing when you're building up. So remember, those things take off of land. They don't necessarily take off of a ship.
Right.
I don't think you could probably take them off of a carry, even though it get a little bit of a run. And maybe the carry goes 30 knots, it gets some wind over the deck, and maybe
Yeah.
it works. But Elroy was designed from the ground up to be a middle mile cargo autonomous vehicle.
Yeah.
You just don't turn, yeah, and it goes up and down, right? Doesn't need a runway.
Yeah.
It is tremendously, it's non-trivial to try to change something, whether it's transporting people or carrying
Military
weapons.
strike drone.
Yeah.
Yeah.
All of a sudden be in that. Now, where Elroy has an advantage where, let's say, a Predator might not, is that Elroy can modify that canoe underneath. If you're looking at the screen, that
Yeah.
looks like a little canoe underneath the body.
Yeah.
They can modify that to anything. That is a pod that just comes off, and it can be
Payload,
switched in
right?
and out.
Yeah. Yeah.
So there's actually a pod being developed with their partnership with L3 Harris to put an ISR, a reconnaissance, a video feed on that in the front of that pod, and it weighs around 30 pounds, so they can put even cargo with that pod on it. So this becomes a multi-mission. I want to be very clear. While we embrace the multi-mission, we believe the TAM, the total addressable market, is in cargo, and we are staying bore-sided and locked on that with Elroy.
FedEx, CBS, Mesa.
Got it. You got it. That's where the money is.
And so thanks for Chip for saying that. So this is Osprey-like, right? So it.
Yes. Yeah. But it doesn't have tilt engines, and it doesn't have tilt engines. It has engines that lift it up that are parallel to the ground, and then it has propellers that are perpendicular to ground to be the standard propeller.
Yeah, super cool.
Yeah,
Oh.
Super cool. Plus, I think Neil got to the hybrid electric. The reason why this is so cool is that you don't need electrification in wherever it's going. You just give it gas.
Yeah, so think of Tesla with all the charging stations. That really helps increase the range, and but you need an infrastructure, right? So they specifically designed it to not need that, and they actually named the plane the Chaparral. And for those of you that live in California, as you're going up the 405, you see it's like this weed that grows on the side. You can't kill the darn stuff, right? So it's meant to be a very rugged aircraft, and it can land anywhere. And so what's neat about, think of like a fulfillment center or a distribution center, it literally can land in a 50-foot by 50-foot corner of a parking lot. It can get in, it can refuel quickly, and then it can get out. You don't need a long charge. You're in and out, and you can refuel with a can of gas if you need to, if you're Marines in the field.
So, I mean, everybody wants flying cars, right?
Yeah, why not?
Yeah. Well, I'm trying to figure out how to get from Park City to the whatever ranch that I might want to go to instead of driving 3 hours, right?
Sure. Well, I think you hit on something. It's all about speed. So Elroy, for example, their goal is to be 5 times faster than a truck. Now, it won't carry as much as you can put in a truck, but if you can get it there faster, and if it's mission critical, or if it's medical equipment or devices that are needed, you need to get it there. And people are so accustomed to getting things when they want it. Like if you order something on Amazon, it's not there the next day. You're going to go somewhere else.
Boy,
So
we spoiled, huh? Man.
Yeah, and actually interesting going back to Radian Aerospace. Besides going to space quickly and tactically, their part of the game plan is to get anywhere on the planet in about 70 minutes. So you can go up and over, and boom, you're there. So this is all about speed, innovation, and it's important.
Yeah. Wow. Super cool. All right, let's do one more before we jump. Or whatever else you want to do.
No. One thing I actually did want to highlight, and we can talk about some of the other deals, of course, but one of the things that we really like about this space is that, our thesis was that this is the mega trend. This is durable. This isn't going away. Our threats aren't going away, and the need for innovation, and we just talked about speed, that's not changing, right? So we like the fact that, we're committing capital for, this period of time. And then really, we launched the fund, and then, we had 2022, which was a really challenging year. And I pulled this slide up because the green line there, that's a combination of some of the major defense primes. They all had great years. Part of that was, we had Russia, Ukraine. Part of that was that, they happen to be more resilient defense-oriented names, but they had a great year. The rest of the equity markets and even fixed income markets, as we all know, got really clobbered. And then the other neat thing on the private side, some of the biggest transactions of the year were all in aerospace and defense technology. SpaceX raised $2 billion. Anduril, one of our companies, raised $1.5 billion. And these are both at, meaningful upticks in valuation. Shield AI was a pre-fund deal of ours. Within a year, they were up almost 2x. They raised $225 million. You had some large acquisitions. Aerojet Rocketdyne, $4.7 billion. Mantech, $4.2 billion. Epirus had a huge funding round. Maxar, $6.4 billion. So a lot of money is going into this space, and we continue to see it being interesting and very resilient. And we think a pretty dynamic period of time for us to invest over our investment period.
Look at the ARC got crushed, man. Wow.
I know, and it's and we know Kathy, and we follow them. The team. Chip actually was just on a podcast with them, which was neat. And I think, what are you up to, like 30,000 views, Chip?
Yeah.
And it's great, and we can send that out to the group. But for folks that have an interest, it's a really neat primer on what's happening in the space, innovation, and look, but that's an example of what's happened across some of the innovation stocks. And look, a lot of that is coming through, which is good for us, is coming through on the private side, because we typically see 3, 6, 9 month lag, and a lot of very innovative companies, they typically raise capital for kind of an 18 to 24 month period. So folks that had raised capital in 20 or 21, they're coming back to market, and they're being more realistic with their valuations, with how much they need. They're being smart about their cash flows, and it's a great time for us to be looking at opportunities with really reasonable valuations.
Yeah. Super interesting. Let me just check and see. You might know offhand, but let me check. Trying to just let the audience know when the next one is, when we're going to get deeper into this, and with more.
I think it's
31st.
31st.
Yeah. So stay tuned. Stay tuned for an invitation. Of course, folks, you'll get it. But on 31st, we're going to get deeper into this and talk more about each one of these and the fund and so on and so forth. So really interesting, fascinating stuff. Really I'm gonna have to buy Hamlet a drink, and if you guys want one.
Good.
Right?
He's the best, and we do a lot with Hamlet, and we think he's just such a bright guy.
He's really so solid. Yeah, he's so good.
Very solid. And what's neat about our particular space is that you've got a lot of folks that have this mission-driven attitude, and in venture and growth equity, it's not winner take all when you do a deal. So we love to partner with great people, with smart people. I think more people that bring their attitude and their investment acumen and can help these companies grow, because we need it, right?
Yeah.
We believe that America is better and stronger when, and the rest of the world, frankly, when we're in the lead. And we need to stay in the lead because we've got threats out there, and we need these innovative companies, and we need more capital, because the DoD this is actually fascinating, and I'll quit on this one. I think I was mentioning earlier before we did the recording, earlier this week, we had Chris Cleary, who's the Navy's principal cyber advisor, at a fireside chat this week in DC. And he literally had just come from the Pentagon, briefing the Secretary of the Navy. And he made a statement that was kind of jarring. He said, you know, we need the private sector and we need partners like Marlinspike and Andrew and all these great companies, because the DoD makes nothing. And everyone, there was like a visible reaction in the room, and people kind of sat back. And I was like, you know what? He's right. They don't make anything. They outsource everything. That $858 billion budget, that's going to Northrop and Lockheed and Andrew and all these innovative companies, because they're the ones that have to make this stuff.
Yeah. Fascinating. And they've got bureaucracy that cuts both ways. It's good that they have it, so things get done right. You know, the military mindset, right? Mission driven, you know, don't screw things up, right? Type thing. And so sometimes in that environment, the innovation just is stymied, right? So I get it. That's super interesting.
Well, thank you so much for having us. And we look forward to digging in further. And we'll have Chip and my other partner, Mislav, on as well, so we can dig into to some further details on our deals, and you know, we'll go from there.
Yep, super appreciate it, folks. We're going to record this, as I said, and post it, and we're also going to put you in direct contact with Neil, and then we'll alert you when for the 31st, so you can participate in that. And as really thank you, Neil, and Chip back there, thank you so much. Super appreciate it. As I always say, always is hyperbolic, but I do say it always. Thank you for sharing with us. The only thing you can't make more of, and that's your time. Till next time. Thank you. Thank you very much.
Thank you. Thanks, everyone. We appreciate it.
All right.